Crypto Hotep here with another investing video. We are on week 70, the big 70 of the family portfolio and dividends tracker. If this is your first time watching this video, feel free to go to the channel, go to week number 1, and that's where I go through my whole methodology on why I'm doing and why I'm tracking and why I'm recording these videos every week. Basically, quickly, I gave my family a short list of stocks over a year ago to choose from. Recognizable brands that they know. They picked the stocks that they were most comfortable with, and then we proceeded to use M1 Finance because with M1 Finance you can create a big portfolio and then have sub portfolios or pies within it. You'll see it shortly. Every week we go through this portfolio. We go through dividend activity, balances, deposits, overall market news, and how we're feeling, and basically just track our investment journey. These videos are by no means financial advice, so please do your due diligence and research those stocks before you invest in them. With that being said, before we go to week 70, let's go to week 69 and recap where we're coming from. So week 69, we actually had a very good week, up over 4% year to date, with a balance of $27.92 and 53 cents. Dividends earned of $15.20. Market gain of 72.47 with a money weighted rate of return year to date of 4.08%. So let's see this week. This week we are $27.62 and 50 cents. So we actually went down a little here. We still have $15.20 dividends earned. Market gain now has shrunk to 27.54 with a money weighted rate of return year to date of 1.97%. And it's been an eventful week. The Fed actually chose to keep rates unchanged, so those rates are still the same as they were. Jerome Powell does not see or does not have a vision yet on cutting rates as of yet. He doesn't know about September. So all in all, and then also the tariffs deadline is also today, which is technically July 31st still. So we have a whole bunch of stuff going on, and then we also have earnings. Big tech had earnings this week, so a lot of stuff going on. Another thing is I actually adjusted my portfolio, and I did shrink down my portfolio in regards to the number of holdings I have. So I actually went from, I believe I have 51 holdings down to 12. Again, that is down to 12, but we'll go over that shortly here. But let's go to the activity. Let's see what's happened between this week and last week. So between this week and last week, we had, these 12 buys and 26 sells. These are basically rebalances in my portfolio. So nothing really has changed there. Okay. We did have a deposit of $15 though. And we had 8 buys with that $15. There was a little bit of change left here as well. And we bought some Costco, Lowe's, Target, Cintas, Pepsi, Apple, Waste Management, and Sony here. Okay, and let's go bottom to top, and let's see. Why? Okay, there we go. I don't know why that was a little bit different. So let's go bottom to top. At the bottom is my wife, unfortunately. My wife's at the bottom here, but she still has a great money weighted rate of return of over 17.5% year to date. Dividends earned of $1.30, net market gain of $33.49. Her balance is $333.31. Chart looks fantastic. Celsius still holding strong here. Google has pushed up here over 10, almost 10.5% year to date on Google. Back down on Pepsi though. Pepsi had a rather slower week this week, And that typically happens when Coca-Cola also does their earnings. It has a negative effect on Pepsi, so this makes sense. Tesla down almost 10% on Tesla. But all in all, our portfolio is still doing what it needs to do here. Let's go to our oldest. Wait a minute, that's not right. Seems like M1 Finance, they changed a little bit here. I would like to keep the balance as, there we go. Let's go to our middle. Our middle has a money-weighted rate of return of 0.23% in the negative, so negative 0.23%. Dividends earned of $1.47. Market gain of negative $2.01. Total balance is $343.04. So we have about 7 holdings here in our middle portfolio, and readjusting my portfolio also had me look at everybody else's portfolio and the number of holdings they have. 7 is okay for now. We won't be increasing it anytime soon, but I think 7 is going to be that threshold as of right now. So we have Google at 31.49% up, Sony up almost 6.5%, Amazon up almost 11 or past 11.25%, and then Costco is back in the green right now. Tesla, we're still down double digits in Tesla. Starbucks still down a little bit in Starbucks, and then Target is bringing it down considerably right now. Okay, let's see. I don't know why. We're going to have to work on that with M1 Finance. Let's go to our youngest. Our youngest stocks balance is exceeding $361.51. Dividends earned of 87 cents. Market gain of negative $4.61 for a money-weighted rate of return of a negative 1.38%. Apple, which had great earnings actually, they had a double beat on their earnings this week. Still down over 11.5%. Costco, we're up over 4%. Sony, up over 13, almost 13.5%. Starbucks still down, and then Tesla, we are down as well. These holdings are fine. The number of holdings is just fine here in this portfolio also. Okay. Let's go to our oldest. Our oldest has a balance of $8.14.88. A negative 8.16 money-weighted rate of return year-to-date percent. Dividends earned of $2.90 and a market gain of a negative $64.56. So very similar. Apple is in the negative as of right now, down over negative 14%. Costco still up less than 1% though. McDonald's up over 4.5%, and then Tesla again double digits in the red. Okay. And last but not least, we'll go to mine. So as we spoke about, I did drastically reduce the number of holdings in my portfolio. And the reason for that was because I correlated my portfolio to the balance that's in my portfolio. Let's click on this. As of right now, my balance is about $900. I had over 40 holdings in that portfolio with a concentrated thought process around dividend investing. And the dividends are fairly small when you have that many holdings for that small amount of capital. So what I did was I actually used AI, used Grok, asked Grok for a proper like stock holdings per account balance, and they gave me a pretty decent number of around, say the cap would be 10. So, I added a couple, so we have 12, and I probably won't increase that amount until we get to around $5,000 in the balance for mine. So we won't increase any more, probably won't add any more stocks or anything like that until we get to that balance, or until we exceed that balance, I should say. So I chose my stocks primarily on if they did generate or if they do have a dividend. And then also if the dividend was growing. And the actual process that I used to audit this, it actually helped me remove a lot of some of the laggards that were in my stock portfolio. Ones like Kraft Heinz. Kraft Heinz was actually in the negative for dividend growth. You might as well just be holding your money in a savings account for that matter versus holding it in Kraft Heinz. But that was very eye opening. And just picking and choosing some of these stocks, and you know what, it was a fairly easy thing for me to do because when you have that few of holdings now, you can keep track on them a little bit better. You're not overwhelmed by the number of companies that you have to watch now. Everything's pretty much centrally located, and it's easier to get that information. And another thing that I audited was if not only if the company had a dividend yield, we're looking at Waste Management, ticker symbol WM here, but if that dividend was growing and for how many years? So Waste Management's been in growth mode for their dividend yield, 21 years, and they have a dividend growth of 8.62%. And one thing that I try to select my companies on is having a dividend growth nearing 10%. So 8.62 is very close. And then if I look at Waste Management dividend, this is just something you would like to see. You love to see this in the upwards trajectory. So that's what I did. I went through each one of my stock holdings, did my audit, whittled it down, and 12 was a very good number for me. So we'll go through that fairly quickly here. So for technology, we just have Microsoft and Google. Okay. This portfolio alone up over 26% year to date. Very good. As you can see, there is a drop off here just for this week because of the whole rebalancing thing. And not only did I adjust the portfolio, but then I did a rebalance, so all my percentage and allocations fit nicely in. Finance, we just have two here, Visa and then Moody's. So Visa, again, growing dividend. Moody's, also a growing dividend. And I was actually surprised at how big their dividend is growing with Moody's. Industrials and energy. This was very hard because the whole sector of industrials and energy was just booming. So I decided on Cintas and Waste Management for my top two here. Okay. Let's go to real estate. Real estate, we just had one, and that was O. I just wanted to do a dependable income generator, and that's O. O's dividend is one of the outliers other than Coca-Cola that is actually below, the dividend growth is actually below 10%, but the consistency of that income makes up for it. Okay. And as we just mentioned, for restaurants and food, I have Coca-Cola, and then I also have Domino's Pizza. Domino's Pizza's growth rate is tremendous. Coca-Cola is also an outlier that is below 10% dividend growth rate, but the consistency of Coca-Cola, you just can't match it as a business. Pharmaceutical, we went with AbbVie. So I looked at AbbVie, their growth rate with dividend did outpace Pfizer and Johnson & Johnson. And I felt really good with AbbVie. That doesn't mean I won't ever invest in the Pfizer or Johnson & Johnson. It just means right now my focus is on AbbVie. And then last but not least, consumer staples and shopping. So the GOAT, Costco, can't beat it, cannot beat it at all. And then we have Lowe's here. Okay. So guys, and we'll wrap up here, but this, I think, with me centralizing my focus here with my dividend, and then making sure it's a dividend growth company as well. This will be, my returns will be a little bit more pronounced in my portfolio, as well as those dividend payouts. And then I can scale up and add to those stocks as I continue to go. So we're ending week 70, guys, at a balance of $27.62 and 50 cents. Dividends earned of $15.20 with a market gain of $27 and 54 cents, with a money-weighted rate of return year-to-date of 1.97%. If you liked the video, feel free to like, subscribe, comment. And as always, guys, thanks